Good afternoon. We're here in the majestic Victoria Falls on the sidelines of the Chamber of Mines annual conference, courtesy of our very generous sponsor, Nedbank. And I'm with Sokwani Chilembo, who is the chief executive of the Zambian Chamber of Mines. And you also have a role in SADC as well. Maybe you can just share with our audience the details of your regional role.
Yeah, thanks. I'm also the current president of the Mining Industry Association of Southern Africa, which is the Association of Chambers of Mines. Yeah, so that's a role I've been running with for about 3 years now.
Fantastic. Yeah. We're delighted to have you. Thank you so much for doing this. And, you know, it's interesting. Zambia is kind of similar sized economy as Zimbabwe, where, the mining sector over there is big in the copper belt, and you have a lot of Chinese investment, which is similar to us. We, the minerals that dominate our mining space are a bit different, platinum and gold now. Where do you think, what's your, at a very high level, perspective of where Zimbabwe's mining sector is?
Well, I think we're in a very similar, in a much more similar situation than may be apparent at first glance. You are seeing a lot of resurgence in interest in your sector thanks to the green pivot in terms of energy and mobility. So lithium has become a big factor in your growth. We've had a recent lithium discovery because the geology does not respect borders. So we are seeing similar endowments to yours in the south of the country. But the overall interest in our economy is really driven around the copper and other green minerals such as nickel and cobalt. So we are very similar in that sense, and we're also very similar in that we are seeing growth in mining outside of the traditional areas as the price of gold escalates. Not quite on the scale that it's happening here, but it's also something that's becoming very widespread in our country as well. And we are both energy constrained as we try to ramp up. And we are also infrastructure constrained similarly. So we are more alike than different. And it's opportunities like this that enable us to share learnings and opportunities through which we can continue to advance growth given the global vista. Yeah.
One of the things that I find quite interesting when I think about Zambia and when we compare, Zambia and Zimbabwe is, perhaps 30, 40 years ago, Zimbabweans used to look down on the Kwacha. We had derogatory language for the Zambian inflation and currency issues, and you've since reformed. You got rid of exchange controls. The Kwacha actually, I think you actually removed a zero.
Rebasing, yeah.
And you don't actually have currency issues like we do. And at a conference like this, I think one of the things that people always talk about is the retention and the monetary policy framework. And I don't think people have that conversation when they discuss mining in Zambia, because the monetary policy framework just works. So I think we've got a lot to learn from Zambia, from your experience. Do you think from the conversations that you've been party to here that our government officials, the Reserve Bank, Treasury, do you think the message is getting across, the lessons of Zambia are relevant to us, and we should be moving in that same direction of getting rid of exchange control and getting rid of all these currency distortions?
Well, I think I can probably only discuss that in the context of how this feeds into stability and the perception of risk. Because as a jurisdiction, things really have only begun to come together for us when the government in place has presented an outlook, a consistent and stable outlook. Like it or not, if you are a taker of foreign capital, your business relies on feet in the door. So everything that you do must be in, the same vein as one who runs a shop. You have to present a consistent, steady offering and brand, and people will come. So that's the Zambia story. We were very unstable on a fiscal policy and regulatory policy side on mining, and just like yourselves, 70% of exports are mining and at times 20% of GDP. So when you get that right, it changes the outlook for the entire economy, lifts all ships, if you like. So once we managed to get that headed in the right direction, basically everything else fell into place. And it has been a very long and hard haul since outright liberalization, because it coincided with a few troughs globally, which impacted our mining economy as a result. But if you present the steady outlook, capital will come. After all, you've got the Great Dike, and it turns into the copper belt just north of here. So because of that, capital will always come, just as long as you manage your optics well and present a steady offering, which is what Zambia has begun to do. Yeah, it's not perfect, not quite there yet, but we've begun to do so.
So I'd like to sort of understand from you the relationship between business, in this case, the mining investors, mining sector, and government. The background to my question is like when you look at Zimbabwe, generally, the relationship is more like a cat and mouse relationship where there's a certain level of mistrust, government mistrusting the businesses and vice versa. It's only fairly recently where we've seen, the two sides trying to close rank. What's the relationship between the business sector or the mining sector that you represent and government in Zambia? How have you seen it over the years? Has there been any transition where it was improving or getting worse, and what has been the main ingredient for that?
Oh, there's been a dramatic improvement.
Okay.
I mean, my office is next door to the Minister of Finances.
Wow.
And the Chamber and the Minister of Finance hadn't had a meeting for 6 years.
Okay.
As of 2021.
Okay. Mm-hmm.
But when we had a government come in led by someone with business experience, as our president has, this
That's
is
our
something.
President HH, huh?
Yes, this is something that he's always been painfully aware of as a member of the business community. So with the assistance of the International Finance Corporation, the structure has been formed called the Public-Private Dialogue Framework.
Okay.
It's basically a quarterly engagement by sector, co-chaired by the sector permanent secretary and the chair in the case of the mining sector of the leading industry association in that sector, where issues are tabled and hashed out. As much as possible, solutioning is done. And if we fail to agree, then it is escalated to what's called a National Steering Committee, which is actually chaired by the head of state.
Okay.
What this has done is it's enabled sunlight, if you like, to sanitize issues that would probably otherwise not have seen light of day. Sometimes things are inconvenient to discuss, and that's where a lot of the tension between government and industry arises from. But it's been instrumental in enabling us to have the difficult conversations, sometimes tense, but get the work done still. So we've made a lot of progress over the last couple of years thanks to that. Covered a lot of very, let's call them contentious pieces of legislation relating to mining. It's still ongoing, but progress is being made. As I said, it's not perfect, but we certainly are getting the work done and moving in the right direction, largely due to the frank face-to-face conversations that we're having in that fora and the sub-meetings that result from there, because this is what deals with the hot issues of the moment. Yeah.
And when you assess the operating environment as business, right now, with President HH, but even going back maybe 10, 15 years ago, as a mining sector, what's your assessment? Do you feel that maybe government is doing enough to try and make that environment palatable for investors? Do you feel that maybe your submissions, whenever you make them to government, they are considered, or you reckon that maybe government just puts policy out there and say take it or leave it? How is that the policy environment as you assess it as a business players?
Well, when one has very difficult content to consider, the people you want on the table are frank and earnest. And those are the conversations that we're having. They're not easy. They can be very abrasive at times. But the key thing is to get the work done. Because, we must be quite dispassionate about how we do this. Because at the core of our problems is economics, which is business. So you have to be quantitative. You have to game things out correctly. Because the costs of not doing so have plagued us for a long time. Our country risk premium, for example, is elevated because of the history of fiscal and regulatory policy inconsistency going back almost 2 decades. So, this is where you begin to get that right. And, it's a good starting point compared to where we were, because we were talking past each other most of the time in the previous dispensation. So yes, things are looking better, but it's not easy because we do understand that we would want a better average effective tax rate for our mining sector, for example, yesterday. But we understand that the government is unwinding a very heavy debt portfolio, so they don't have the headroom. But what we need is consistency in the direction that things are going. Our Minister of Finance has been very innovative. Even when he hasn't had headroom, he's done things like remove duty on capital equipment for the sector. And those are the sorts of things that maintain momentum. Yeah, so like I said, even if the Minister of Finance didn't have headroom, what he did is he removed the duty on capital equipment that goes into mining production, which was a demonstration of faith that, he will improve the average effective tax rate position for the country, which is not competitive relative to our peers in the region or even globally. And that's what you need. You need consistency of intent. And that's the best you can do under those constrained circumstances. Remember, we're also constrained by power.
Yes.
So given that environment, yes, we are seeing progress. And what we would like to see further is a further de-risking by the tightening of regulation of our sector. I mentioned artisanal mining, which is very prevalent in your country. It's something that's growing in ours as well. We need that regulation so that we can maintain our environment and the integrity of our mining assets, and do things as optimally as possible to give the fiscus a return, investors a return, and all stakeholders as well, the benefits of mining. It's very catalytic and stabilizing to the overall economy.
Fantastic. So you mentioned that you wear a hat on a regional level, and without speaking to your particular organization, just thinking about Africa in general and SADC in particular, I have very strong criticism for regional blocks like the AU and SADC. They are talk shows. They meet annually at these conferences, and almost nothing gets done. And if you think about, if we talk about SADC a little bit and talk about the lack of integration at SADC level, for example, a flight from Berlin to Paris is about 2.5 hours. Harare Joburg is an hour 30 minutes. It's more expensive to fly Harare Joburg than it is Berlin Paris. And it's because of taxes and all kinds of rules and regulations that just make it harder to do cross-border business. And so I think the performance of these regional blocks is appalling. But your association is probably not so political. It's an association of Chamber of Mines, which is private companies. So how do things work at that level? Because I think the private sector is generally much more progressive, much more able to get things done and be efficient. How do you see things at a SADC level?
Well, the Mining Industry Association of Southern Africa has really grown out of what you would call the Africa Mining Vision and SADC as well. But rather than just being talking shops, a lot of good work has been done in regional organizations, with the Africa Mining Vision being a document that basically gives you a roadmap of everything you need to do to get your mining and extractive industry right. You can talk about availing capital to local mining through capital markets. You can talk about ensuring that you escalate local content. You can talk about ensuring that you promote exploration and revenue share for communities. It's all in there as a blueprint. Our challenge, as you've put it, is execution. As mining associations, we meet regularly to share best practice and experience, and really, where necessary, provide practical examples of where missteps have been made in the hope of them avoiding being repeated in other members within the fold. And we also tackle problems that are on the horizon. An example is a couple of years ago, we never used to talk about value addition as a sector. But then Anglo-American came up with that hybrid PGM dump truck. And we also noticed that manufacturers of EV inputs were also doing a lot of mining finance in the DRC. So it became topical for us to discuss things downstream of the gate, albeit in a very self-interested manner, because they'll help us to build new mines. But those are the benefits of coming together. You are then better prepared for when things come round the corner. So yes, we engage very closely. We share experience, and we think the challenge with the regional organizations that you were talking about is that the same isn't happening there. And in the case of mining in particular, you have the SADC Council of Mining Ministers. It's one of the founding agreements of SADC, and it has not been meeting frequently. So our plea to SADC is that this be reconstituted so that the same benefits you're seeing in the Chambers Association can be replicated between ministers as well.
Fantastic, yeah. We really need to do a lot more in terms of integration. We had a conversation with Faisal also during our time here, who is based in Dubai, and is in the gold space. And, what he made clear was how the UAE has become a center for gold trade, notwithstanding that they don't produce any gold. And if you actually think about the capital markets that dominate the mining space, we talk about Toronto, the Toronto Stock Exchange. We talk about the Australian Stock Exchange. Zimbabwe's biggest mine, Zimplats, is actually listed in Australia. It's not listed on any African exchange. I think we're leaving a lot of money on the table because our house is not in order here, so we don't list mining houses on an exchange in SADC. We don't have a regional trading house that moves, whether it's gold or platinum or copper. It's all done by trading centers and capital markets that are actually not even in Africa. How optimistic are you that we're going to take corrective action to bring the trading houses closer to where the resources, to bring the capital markets closer to where the resources?
Well, what do you want to do? What's your goal? Do you want to increase your human development index score? Or do you want to make these actions that will make you feel better? If you are rigorously formulaic about it, you look at historical data, what you require is multi-decade stable strategy. If you have that in place, then it will all come. And it may come in a form that you may not expect. For example, we talk about value addition, but look at Chile. They mostly export ore. That's what works for them, and they don't even do anything very sophisticated as regards things like stabilization funds. They just have a counter-cyclical investment strategy for when they are net positive, which they draw upon when they have a deficit for their budget. And they do everything based on a human development index basis. And they've done so for more than 40 years. There they are, basically an advanced economy. So what do you want to do? Be very clear. And in whatever you do around that, ensure you don't compromise the core goal. That's it. Keep it simple. These other things that we're talking about are, let's put it this way. It's like when you're in a sport. If your players are engaging very well, a single deviation from strategy can be a masterstroke. So, or from your, set plays. So it's the same with the extractives. Be consistent, and then, the opportunities to excel will present themselves. And Zimbabwe has done this before. I mean, our our third and fourth largest mines were actually listed here in 1951.
Oh, I didn't know that.
Yes, you've had a head start compared to a lot of jurisdictions, and we have examples of this success even in South Africa. Look at the PGM story there. Global champions out of capital that was raised locally
in South Africa.
Yes,
yep.
And right up the value chain to where they're producing 90% of the world's catalytic converters in that country. So we have the examples here. All we need to do is stick to the knitting. The basics are multi-decade stable strategies, and you have the geology, the capital will come, and just manage your optics well. It's like I always like to draw an analogy with hosting extractives to running a casino. It's feet in the door first. Whatever you do, it's feet in the door first. And you keep that flow, and the rest will follow.
Thank you so much. Unfortunately, the production team is jumping up and down and wants me to wind this up. This has been a really interesting and fascinating conversation. And I hope that the next time you're in Harare, if your schedule permits, you visit our studio and we pick up this conversation where we left off. Thank you so much for doing this, and I hope the audience enjoyed this as much as I did. Cheers.
All right. Cheers.